Stocks, RBI bonds, gold. Oh, hi. Stocks, RBI bonds, gold bonds, government bonds, corporate bonds, real estate, fixed deposit, gold, silver, platinum, cryptocurrency, NPS, NSE.
प्रधानमंत्री वय वंदना योजना.
This yojana, that yojana. Oh. There are so many investments we all hear about every day. But no matter how many investment products are launched in the market, all investments basically fall under three main categories. Number 1, investments you own. Number 2, money you lend to earn interest. And number 3, cash or cash equivalents. So, let's talk about ownership investments first. These are assets that you own like stocks, real estate, and investment in a business venture. Ownership investments are high risk, high reward instruments, meaning you can either earn big bucks or lose bucket loads. These are best suited for investors who have an investable surplus and a healthy risk appetite. Now let's see what lending instruments have to offer. These are debt instruments you buy from a company or government with an intention of earning interest on the money you have lent. Government bonds, corporate bonds, RBI bonds, government securities, saving certificates, debentures. These are all debt instruments. Lending investments are low risk, low return investments and are best suited for people who want steady returns. And finally, cash equivalents. Cash equivalents can easily convert to cash like fixed deposits and short-term bank bonds. These are low risk, low return investments. So, what are you waiting for? Looking for detailed information about the different types of investments available in the market? Then keep watching.
Investments in securities market are subject to market risks. Read all related documents carefully before investing.